Are you nervous? Why are you drinking water and all?
It's getting up.
Gearing up. But Samir, you always give us headlines. Don't disappoint us this time.
Aim to please.
Nitin, you brought your guitar?
That's become a meme now. No, I'm not going to do any more singing ever.
Great. Thank you, Nitin and Samir, for coming on Money Control Startup Conclave. The theme is Fintech in India. How big is it anyway? And we'd love to hear from both of you. Nitin, this has sort of been a bugbear for you for a long time now. How big is it anyway? I remember we spoke to you a couple of years ago and you said, the actual size of the market is 6 crores, but, startups have raised money like it's a 30 to 50 crore addressable market. And you recently also said that, this is also a reason why we are seeing these governance lapses in some startups, because investors have oversold the potential of the India market. So tell us a little more about that.
Yeah, no, I mean, firstly, the reason for talking about these things is because I think people should build businesses with the right expectations, right? Because, and it's very similar to me going out there and telling very few people in the markets actually profit trading the markets. Right? Because if people build it with the right expectations, you're going to take the right kind of decisions, right? And firstly, the objective of actually sharing some of these point of view is that there are so many people building businesses out there, and thanks to the success of a business, people think some things that I say make sense. So so I go out and use that opportunity to say it, right? Yeah. So I mean, it is kind of obvious that. Like if you oversell while raising funds, then you're forced to kind of keep saying a story which matches up to that expectations, right? And sometimes some founders under pressure might want to continue saying the story without the story actually playing out, right? And I have interacted with a bunch of founders who kind of seem a little deluded to believe, even though it's very obvious that the story is not really playing out how it was supposed to continue to believe. It's a problem, I mean, all of us have egos, and especially, I've seen with entrepreneurs, we all have bigger egos than most people out there, and it's very hard to accept defeat or to say, what, maybe I was wrong, and. Yeah, so I mean, I think that's one of the reasons I went out and said whatever I said that day.
Samir, do you agree with Nitin?
On which part?
The size of the India market, how big is it according to you? I mean, you have 300 million yearly active users, but Nitin thinks the actual size of the market, I mean,
no. So the actual size is monetizable.
Monetizable size is what, 100 million? What's your prediction?
Yeah, I mean, I think it's a subset of 100. I'm saying which
subset of 100. So which is how much?
I mean, I don't know. I mean, like, this is just a guesswork, right? I mean, we're all guessing here. No, I'm saying if you have to spend an X amount of rupee to acquire a customer, how many customers can help you recover that money that you spent acquiring the customer? I think it's a subset of 100 million today, but India is a developing country and we are evolving fast, so it could change very quickly. But yeah, I think it's a subset of 100 million is what I think.
Samir?
So I think it depends on 2 or 3 things. If you're looking at a 7-year horizon, 8-year horizon, and saying, I invest $100 million, I get 100 million customers, I have to make X ARPU to reach profitability. The available high ARPU customer size is 100 million, broadly in that range. I would agree with that. If I look at the payments industry, for example, or I look at search or chat or content, fundamental building blocks of the internet, in the last 5 to 6 years, we've added 500 million, maybe 700 million Indians to the digital economy. So you have the building blocks getting into place now. If I look at the total quote-unquote addressable market, that number is in fact 700 million. I think payments, we'll touch about 500 million lifetime users by Diwali this year.
Wow. 500 million, so that's
By
one in
Diwali,
every
that's
2-3
lifetime
Indians.
registered.
Yeah.
But on an annual basis, we have 300 million, which I know is a superset of any e-commerce or fintech category, because it's payments, it's the staples. If you have smartphones, you have data, you have payments, you have content, transactions will flow. So I think it depends on how many years you're projecting forward in terms of that LTV. And if you take a 8-year DCF, most of the valuations are overhyped. I'm saying that as well. If you take a 20-year view, most sectors will generate cash. Now, question is, do you have a strategy where you can last that long? And I think Nitin's strategy has been fantastic. He's played the long game. Vasu's done that. The companies that are making profits are making profit for a reason. If you take a 8-year view and work with the VC model, the VC model itself has perverse incentive. So you'll never make money. Anybody who's raising massive funds for exploiting a market with a 2% annual fees is not betting the farm on that venture. You're just betting on making a quick buck or getting a disproportionate market share and palming it off onto the next person. That's what the startups are doing as well. I meet so many startups. I'm the 51st person entering payments. I'll get consolidated and bought out by somebody. That's not a strategy. That's a prayer.
Right. So PhonePe, if I look at PhonePe, you've gone sort of beyond payments, right? You have insurance and digital gold, and I mean, you have plans for AMC and stockbroking and
not AMC.
Not AMC, mutual funds. So for that market to upsell from payments, I mean, the 300 million that you spoke about are, people who use PhonePe to perhaps buy something. But within that, how many people do you think will potentially use these other financial services that you're offering?
Again, are you asking me over a 5-year horizon or a 20-year horizon?
Today's horizon, 1-year horizon?
1-year horizon, I think that number would be maybe 20 to 30 million people. If I look at health insurance penetration in India versus look at the health insurance prospects, right? Some of the, when you become a founder of a company, when you start a business, nobody starts and says, by next year, can I capture the entire market? You can do that in manufacturing. You don't do that in technology in the first place. If you're distributing, you're primarily distributing. I think we both run distribution companies, not manufacturing companies. You won't see a hockey stick in demand that you can organically create. You take other people's manufactured products, whether it's financial products or it's tangible physical products, you take them to the masses. I don't think you should look at the market 1 year at a time if you're playing that game. You have to play the slow game. You have to let the market come to you as well. So to me, if I look at insurance, I would imagine we'll have 100 million customers in about 7 to 10 years on our platform alone. I'm very confident of that. It's 4 or 5 million right now. But I think we'll get there. Because for 10 years, if people are using apps like PhonePe, they have a data footprint, they're aware of these products. Within 8 to 10 years, I believe that there'll be a lot of people who will want to insure their lives, they'll want to insure their health, they'll want to insure their two-wheeler, their four-wheeler, whatever have you. So I think it's just about how long of a how much leash you have.
Got it. Nitin, would income tax filings or number of people filing income tax, should that be the only metric to assess how many people can afford these services? Because I'm sure there are many successful small businesses who are perhaps not filing these numbers accurately, but they have the money to spend. So how do you sort of peg that?
Yeah. No, I mean, that's the reason you're multiplying, how many people are, filing income tax. If there are 6 crore Indians filing income tax returns, you're saying maybe there is 1x who don't, right? Which is, there's another 6 crores. I mean, you get to that 10 crore number saying that, saying that there are a lot of people who are not filing income tax. There are a lot of farmers who are rich. There are a lot of small businesses which are, which are probably wealthy and etc. So, but can it be 3x, 4x? I'm not sure. Can you, if say there are 6 crore Indians who are saying, not even 6 crores, I think it was like the 3 crore, 4 crore Indians who say they make, around 5 lakhs and over, 4 to 5 lakhs and over. Are there going to be some 20 crore Indians who actually make that much money and who are not showing up on that list? I don't know. I mean, it seems not plausible types.
Right. So, but Sameer, I mean, funds have been raised on that 3x, 4x promise. So when do you think revenues will sort of match those valuations for some of these startups?
I think half the problem is that especially in the early stage VC market, people are projecting revenues, not margins. I actually think that this is a fundamental problem in our ecosystem. Because if you look at, take the payments discussion you just had, the 5th or 10th player entering the B2B payments market would say, this industry had 2 billion worth of revenues. I'll price cut, I'll do some hacking around, I'll become 10% of the market. But you've brought the entire industry's margins down by 10-20% doing that, using VC money. Everyone's margins are getting eroded. This is why you're having such crazy cycles. And by the way, the VCP market cycles are compressing. It was 10 years where you would have chaos, now it's 8, now it's getting to about 6. Because you're realizing that the revenues and the margins are not the same thing. To Vasu's point, if 90% of what you're making in payments goes directly to the manufacturer through interchange, you're playing in that 10 bips. How many players can play in that 10 bips market? You don't need another PA. You don't need 75 insurtech companies. The FOMO model that's playing out, I think there's a genuine place for 2 or 3 really, really high-class companies in any segment in India. The population is that large, I think the TAM is there. I think you'll make money. The problem is there's too many people entering every sector. And I think there's a second problem compounding that. I'd heard this recently at another event from Kunal Shah, I think it summed it up best. I think we're inviting FDI with a capitalist mindset, but we're expecting entrepreneurs to play a very high volume, low ARPU, socialist mindset strategy here. Those two are at discord. When the capital's coming in, people are expecting, if you get 100 million customers, in payments, for example, we should be doing an IPO like PayPal. Well, there you earn in dollars and you earn 1.5%. Here we are actually like working on TSP fees. So the math is completely
maybe a good point for you to talk about MDR also.
Sorry?
I said maybe this is a good time for you to talk about MDR.
See, again, does it help me strategically as PhonePe? I'm again saying this, I've said this over and over, even in close circles. It helps me strategically because I can be the last man standing. That's because I have a capital strategy where I have very high margin, we are staying very, very high on automation, and I have really strong long-term strategic backers. If I was VC-backed, I'd be sweating bullets because trying to say you won't make money on your core business, you're doing societal good, now we're a public good, is not a strategy. There's a reason there's 100 companies in this industry vying for a license. Payments penetration is like, there's 700 million people that you have to get digital payments to. But in this entire industry, barring a few B2B players, the next highest profit pool and possibly the highest last year was actually NPCI. They made more profits than any of the payment companies.
I think Dilip's in the room.
It's just a fact. I mean, their reported profit is higher than most of the payment companies. You're seeing the who's who of the industry here. So there's a market distortion where the money is being raised on the private sector, but you're not monetizing directly. And this is where I think our total addressable market's appetite to pay, willingness to pay for an Ola or Uber cab versus government interventions or other interventions saying, don't charge money, is creating very, very high stress on the profit pools of companies.
Got it. Nitin, you know, I asked Sameer about PhonePe's strategy, how they seem to be evolving to this financial services super app with a whole bouquet of services. You're also entering stockbroking. So how's it going to be competing with?
No. Apparently Sameer said I need to be in a cage fight with... No, sorry, you didn't say.
Oh, thank you.
Him and Mukesh. I volunteered the two of them.
Actually, Nitin looks dressed the part also for a cage fight with a jacket.
I'm referring. It's him and Mukesh Bansal.
Yeah. No, I mean, see, the thing is, if someone can expand the markets, I think it'll be someone like a PhonePe, right? Because he's got 300 million people visiting the app, and the real problem to solve in India is that. And I don't think as Zerodha we'll be able to, the way our strategy is, we'll not advertise, we'll not market, we'll only educate and etc. I mean, we'll always keep attracting the top 1 to 3% of this country, right? And the way to go between 2, 3 to 15, 20 is someone like PhonePe. So I think it's good for the capital market ecosystem.
You also have a rival who's very heavily funded at some 10, 12 billion valuation.
No, I mean, see, eventually
Sameer's...
Right.
This is the problem. I'm heavily funded, has nothing to do with my valuation. That's exactly the problem in the market. Look at his bottom line. He's generating $500 million in profit a year. I'm raising capital and diluting equity. If you think the odds are stacked in my favor versus him, we've got it seriously wrong, guys. I can tell you how hard it is to raise money in this market. I have. It comes at a price. It comes with a certain set of commitments. He's free to innovate and invest for the long term in a way that very few people in India are. We have to stop confusing valuation with capital adequacy. That's the guts of the problem.
Yeah, no, I agree. As in, I think, see, the revenue pool really still is in the top 1 to 3%, right? And there, I think, what is really the moat for Zerodha is really the philosophy with which we work. It will be very hard for someone like a PhonePe or anyone else who's raised VC money or whatever kind of capital to follow. Like, like a simple thing, like I will never spam our customers, right? And it's very hard, right? I mean, it's very hard if you raise money and you have to show a transaction, you have to show activity. How will my competitor take a stance like that, right? And one of the reasons for not raising capital is also that, is that we understand that the moat is the philosophy and we don't want to compromise with it by just going and raising money when we don't really need the money as well, right? And so it's, but coming back to the point, we need more Indians to kind of move away from bank FDs and gold and real estate and get into this whole, let's back entrepreneurs. It starts with the stock market. It'll probably then extend into, into the private space as well, because, wealth creation has to happen more inclusively in this country. And so I mean, we actually look forward to, PhonePe. But that said, also know that constantly thinking that, if someone like PhonePe is coming, we need to keep upping whatever we have as a product offering. Because we know we want to still be a large portion of that higher revenue generating users in our industry.
Right. Sameer, now the big focus, I think you started merchant lending pilots recently. Lending is going to be a focus. Paytm has been dispersing more than 5,000 crore worth of loans every month on its platform. Now, since you have more than double their customer base, how soon do you think you will reach that number, or do you have any targets?
I don't think you enter particularly lending with a view to how fast you grow. Of all categories, that's the one we entered last. We'd always said we need to be near profitable on the rest of the core before we even touch it, because this is lending cyclical by design. You need to get the fundamentals right. So I don't think we're chasing a number right now. We are seeing very strong results early on, but we also realize as you open up the funnel and you lend to more people, risk profile will change. We are also riding an economy that is really, really robust right now, or strong. So whether it's 5,000 or 10,000 or 3,000, I think that time will reveal. Again, our view to this is we are tracking the NPAs. We want to make sure that they're very, very low single digits. Effective NPA, and we want to make sure that we're making money from the get-go. So I'm not going to take that. In any other sector, I would take a market share and a clickbait position on lending. We just won't. It has to make a ton of cash. Lending should make money, and if it's not making money consistently, when you have the down cycles, you'll get burnt.
Got it. What can we expect, from Zerodha PhonePe from a 1-year horizon? What will you focus on from a business perspective?
Yeah, 1 year is again too short. I don't think we're thinking.
Okay, 3 years.
Yeah.
3 years. Yeah.
No, see, at Zerodha, I think the way we're thinking about life is that we've done well as a business, but the reason we exist is to help our customers do better with money, right? And if you're not solving for that problem, there's no real point of existing. So every single thing that we're doing as a business today is really to figure how do we get our customers do better with money because they use us. Right, and so all the new initiatives around that. So yeah, a bunch of them, and the strategy also has always been to collaborate wherever there is no core competency. So while PhonePe would want to build insurance, distribution, everything themselves, and our strategy is that I will do it by collaborating with startups. I'm okay being 40-50% in another business, and don't want to be 100% and do something which maybe I'm not sure of, of how to solve for some of those problems. So around insurance, around, whatever new things that we will do, which isn't core competency, we continue to look for, startups with founders that we get excited about to partner on.
Sameer, you have, I think, a bunch of licenses. You'll be busy.
We have a bunch of licenses. They're all in the distribution space. We'd filed for an AMC license. We actually pulled it back. I think we also did a whole bunch of soul searching in 2022 particularly. And I think we realized that as a tech company, we want to build distribution platforms. We're going to stay away from manufacturing of the products and partner, because I think we actually have very robust manufacturers in pretty much all the financial services that we have in the country. It's about the reach. And I think to Nitin's point, stockbroking as well, I think one of the reasons we want to enter, I don't think we touch his customer base. I'd love to get some part of his profit pool. But I think...
Watch out.
No, but honestly, I think the way to capture that for us would be to actually bring new customers to the market, and a very large number, investing a little to begin with. We've spent about 5 years in the mutual fund sector, distributing SIPs, and again, small ticket compared to large players in the sector, but small ticket multiplied by millions is still a very healthy AUM that's growing at a very healthy clip. I think even in the broking world, I think there's room for us to play, but I don't think we'll end up competing directly with a Zerodha. I think we'll end up competing with some of the others there.
With their rivals.
I don't know if they're rivals. I prefer competitors.
Okay, final question, Sameer. You were the first big startup to domicile, back to India. You mentioned how it's important to list in India because this is your market, you're regulated here. Again, how's that moving? Do you have a timeline in mind?
We finished. So we complete...
No, not the domiciling part. When you're hitting the markets...
I thought I got you on that one. See, I think doing a public listing now, it'll happen only in India. That's one of the reasons we domiciled early, because there's enough time. But as far as an IPO, we're going to ease into it when the time's right. And we've had this discussion with the newest investors as well as with all the existing board members. Our thought process is as follows. Unless we are profitable, and I don't mean any interim metric, I mean PAT, and we are generating cash, which is FCF, I'm not going for an IPO. That's what the early stage investors signed up for. That's the risk they've taken with us. We need to deliver on that. I'm not taking venture risk in this market to the public markets. I'm not doing that. I don't think the Indian market is ready for taking that kind of risk at the kind of valuations that the PE market is able to throw at us. Second, I think we want to get enough time as a private company to open up these new sectors we've actually entered, experiment like a startup can, take our bets without having to be answerable at a quarterly level. When you go public, the reason people say it's not easy being a public company is you have to deliver on shorter term promises and longer term promises simultaneously.
Got it.
So I think a while.
Got it. I'm done with my questions, but I believe we have a guest question. Can we bring up my colleague from the network?
Hi, Nitin and Sameer.
That's AI Cord.
This is AI Cord. I kind of analyzed the mood here. Why don't both of you sing a song for me? Just 2 lines. What's your favorite song these days?